Hello everyone, Safia Quinn, your investor professor. And today we're going to talk about a few things. But the first video, we're going to talk about a question that I received from someone about investing in this economic slowdown. Now, what I have to say about that before I actually tell you the things that you should be looking to invest in, it's only an economic slowdown for some people, okay? Meaning it is not a blanket economic slowdown for everyone. And that's one thing about stock investing and investing in general is that it's relative. So if you're a long-term investor, you are going to hedge your money between bonds and stocks and other investments on kind of a teeter-totter type of situation. So right now, everyone can say, okay, stocks, you can't even say stocks are down, but today, because today stocks are up, I'll show you. Today stocks are up. So if today stocks are up, right, there is something that is down. When stocks start to go down, something comes up. So you as a long-term investor, and this is why we talk about diversification, because when stocks are going down and you feel like you just can't take it no more, that's the time to start moving your money into what is going up. And when what is going up starts to go down, as stocks start to raise, you go back and you start to purchase stocks. Now, the key is timing in this situation, not how much money you have, it's timing. Because if I wait till stocks are this high and I've put my money in other things that are this low, I would have missed the time, right? So let's do this again. So as my stocks, this is stock hand, as my stocks are rising and what I have my money in is lowering, the time for me to start migrating back into stocks is about right here. To start getting in, starting taking my money, cashing my bonds, withdrawing my other investments, whether it be crypto, whether it be REITs, cashing those out and buying stocks, slowly doing a pour into this hand as this hand starts to rise. Then this gap is my profit gap, and I'm riding my gap. My gap gets wider and wider. As the stocks start to go down, stock corrections, crazy administrations, wars, every which and what thing that you can think of. As stocks start going down and this starts going up, right? Here's my place to start selling off my stocks at a place where I still have my profit, selling my stocks as they go down and my other investments go up, okay? So I hope that makes sense. So some things you can do now if you feel that the economy is slowing down. If you want to stick with stocks, I stick with stocks. 90% I stick with stocks. So there's defensive stocks, which are your consumer staples that we talked about. Those are things that people have to buy. Those are companies that people go to on a daily basis. No matter what, people are going to go to Walmart. Walmart is a good stock, right? Procter & Gamble, those are the people who make the products. Johnson & Johnson, right? These are consumer staples, products that produce food and beverages and household items. Utility stocks, right? You gotta pay for the lights. You gotta keep the lights on. Utility and energy stocks. And healthcare, because we are always going to the doctor. Pharmaceuticals are pharmaceutically, and that is always a good stock. Now, outside of stocks, right? Outside of stocks, precious metals. When stocks tend to go down, you see your assets like gold and silver start to increase, because you got to think about it. You know, the people who run this country are damn near from the silent generation. They old. So they know that when the fake value of something like a stock, like a dollar, right? That's all perceived value. They know that there is value in the actual material good. And that's one thing too. Look up aluminum. Aluminum is doing excellent right now. So raw materials and precious metals are gonna go up, because people who know, who have the history, say, oh, okay, this funny money going down, let me hold on to something that I know has value across the world, right? Short-term bonds. bonds, US Treasury bonds, because that is a very low risk and consistent investment. When the stocks start going down, people start to tend to change over to bonds. A new one is REITs that you guys might have heard of. REIT. Those are your real estate investment trust. Real estate is always a good one. So those are REITs. Those are real estate, because even though even though now may not be the best time for people to actually have liquid cash to make home purchases, there are real estate investors who will definitely take advantage of this recession-like feelings. They'll definitely be doing what they do to get people to sell their homes at cheaper prices for them to scoop them up. And real estate is always a good one, especially when stocks start to teeter. And of course, I'll go back to stocks when I talk about military stocks, because military related stocks they always kind of go on the up and up. So key considerations for you to consider whenever you are trying to diversify your portfolio in economic slowdowns is to diversify. Watch your money on a daily basis. That's why I'm making you guys a tracker. On a daily basis, watch your money. And have some risk tolerance, okay? Because this is a long-term game. So you are going to have some tolerance for risk. You're going to have to understand that no, your money won't be all lost in one night, but there are losses. Expect losses, okay? And assess your own liquidity needs, meaning do not be investing your rent payment, your mortgage payment, something for your baby. Don't be investing money that you absolutely need to live, okay? And remember your long-term goals, okay? We're working toward compound interest. We are working toward a leg of retirement, a substantial leg of retirement. So I hope that helps.